All right, so we're going to talk about put credit spreads and call credit spreads really quick. And then for anybody that wants to do like a one-on-one or maybe like a smaller group session for anyone that's interested, we could do that at a later time. But I want to show you from a different perspective. Like we put on the Amazon put credit spreads, we're looking for the edges to hold. You don't necessarily have to hold these all the way till expiration. You can look for, Thursday's kind of that sweet spot where you start getting your profits. But what we want to see is the opposite of what you guys are used to, right? You want to typically you're looking to get closer to in the money when you're going directionally. I want to see these go further this way, right? So I want to see these bad boys, do something like this, be all the way back up here, and then price being traded, down here, right? So, anyways, the further these get away, the higher the probability they're going to expire out of the money, which is what I want to happen. Okay. So basically, this is a very simple concept here. I don't think it's that hard to understand, but again, there's some risk associated with it. Like if price were to settle in between the strikes, just so happens that in between 1835 and 32. So say it settles at 1833, then I would have to buy 100 shares of this. But I can always get rid of it, you know? So if I were to get in the car tomorrow and something were to happen to me and nobody has access to my account, you know, I come out and then there it is, right? I own 100 shares of Amazon. Just like it's risky holding directional calls. If something happens to you and you think it's funny, right? You're like, man, I bought 20. I always think about this. You buy 20 contracts of at the money for 1,500 bucks, your broker's not looking out for you, and something happens. Lo and behold, you don't make it back to the screens on Friday, and you come back and you own 1,000 shares of Amazon. Could you imagine? Now, this is what's happened to a couple of my friends. This hasn't happened. Well, anytime I've been exercised, I've been okay with having the shares and then I just get rid of them on open. Now I had a friend that had a bunch of contracts in something big. It might have been like Netflix or something, but it was a bunch. And he's like, dude, I just got to sign like all these shares. I can't afford this. There's no way I could pay for this. And honestly, you know, he just woke up on Monday morning and he sold it back. And he actually made a ton of money because it had gapped up on him. So he was able to sell all the shares. And he had something like astronomical, right, that his account could not afford. That was his experience. And I had another friend, same thing happened, right, where they got put the shares or whatever, or just was exercised and was able to sell for profits. So it kind of worked out for them. Anyways, on the put credit spread, you could see here that right here we have this red and we have a green. All it's saying is I sold the 1835 to somebody. When I sold this, I think it was going for $1,400. Okay. It doesn't matter about the money, it's the money between the two. I'm receiving a credit. So let's just say 1835 was 1400, say this was 1300. It's the difference between the two. I get the credit in my account for 100 bucks. All right. I'm just giving you hypothetical numbers. Okay. So I get to keep that as long as price expires here, anywhere from 1837 down to here, those edges hold, I'm able to hold that money. Now, typically going into Thursday, these will probably not be worth much, especially the further it goes up. Depending on how far out of the money these might end up being, if they do go in my favor, I won't even touch them, right? And I just get the credit to me. If it's kind of close and it's iffy, and I'm looking at the ATR, say it's like 20 bucks away, it could easily move down to there, and all of a sudden what was a good trade turns into not a perfect trade, right? So you just have to be cautious. Another way that you can manage it is, like I'm always saying, is you buy back the one that you are short. Okay, so I would buy back the red. Okay, I'd buy back this red right here. Does that make sense to everybody? When you buy it back, it erases this. Okay, it's no longer in the account. The only position that I would have would be this guy right here. So when price is moving in the other direction against you, right? So this is a put credit spread. I expect price to go up and never come back down to these numbers. But if it starts going against me, I can buy back the short and I can hold on to the 1832.5 put. That's how you manage this trade. And if you are correct, say one of my edges breaks and then it turns into resistance, I would get rid of the short, keep this, and let this baby go further down here, deep in the money. And then what was hypothetical numbers, what was 900 is now 2300. Okay, so pretty simple. All right, so that's those guys right here. Okay, that's Amazon. And then we have Netflix. Okay, let's go find those guys. And you can see here I have Netflix. The further away from this purple, the better I like it. Okay, same thing here, right? Kind of looks like if you look at the volume, you don't. I like what's it called? Unusual activity in options. I mean, it's fine. It is what it is, right? Um, but you can literally kind of scan this stuff yourself and start putting together. You don't necessarily know what's going on, but like, let me give you some ideas. So we had the put credit spread. I just explained to you kind of how you manage this. The same thing going over here on Netflix. But when I look at this, what's interesting, notice the volume column, and you can change these, by the way, if you're in Thinkorswim. So like I have the delta on here and the theta, okay? And if you look um, down, you can see that there is a number here, 1,543. And then I have this position here, 1,714 on the volume. What does this look like to you? It looks like the same kind of thing that I put on, correct? Looks like the same thing that I put on. So it looks like a put credit spread, right? Somebody might have sold the 360s but bought the 355s. Because they're doing a wider spread in here, they probably collected more credit than I did. Okay? That makes sense? All right. So that's Netflix. And it's up $5. I gave you guys a 367 target today. Okay, did you take it? I mean, your risk was $1.40. Okay. All right. Coming over here. Let's go ahead and look. What's my other put credit spread? Netflix, Amazon. Oh, Nvidia is a little more on the, you know, is it gonna be my bad trade, right? So it's at 188.18. Check me out right here. I'm at 187.5. I'm like on the cusp of being a loser, right? So I would have to come back over here. Let's take a look at this. I'd have to come over here and let's just take a look at Nvidia, kind of see where it's at. Okay, let's open this up. And you could see it's right on the LIS, correct? So the LIS is holding so far. What I don't like is that when I am resisted at the weekly edge, I typically target the mid edge, but not always does it come back there. I got to have some faith in my LIS. If we close under the LIS today, I will probably buy back the short and keep the 185 put. Okay? Hey, will you guys do me a favor? And when we have new traders come in, would you mind just saying welcome or something like that? It'd be kind of cool. I kind of like, you know, it's kind of nice to be welcomed into a room. I know it's virtual and it sounds weird, but I kind of think that it's a little intimidating when you first come in a room. I look at it as like being at any kind of social event and you come in and like people are like not talking to you. You don't know anybody. um, all that kind of fun stuff. So it gets kind of weird, right? So I just want people to feel, and I apologize if I didn't welcome all you. I mean, the bot welcomes you, but yeah, I just want to make sure we say hello to people and make them feel at home. Okay. All right. So, anyways, we're holding here, and so I'm right on the cusp of that put credit spread. Now let's talk about that again. So you can see this is I mean, remember when I did the SPY put credit spreads and they did really well? A lot of times they do really well, right? And so we want these to expire worthless. And if it just stays here, like right on the cusp, these will start losing some serious cash every day. Notice the theta, this will go up daily. It is at $34. Okay. No matter what, these people are going to lose $34 a day, especially if it just kind of goes sideways and we keep getting bounces. They start losing money and we start looking better. We want these to expire worthless. Okay. And B, I thought, oh yeah, that's right. You got out of it kind of quick, right? Yeah. So if you notice on Netflix, what you're at right now is you are above the monthly, you're above the weekly mid, right? Right? So right here, right above the mid. So this would be your stop MB, right? And if you're trying to scalp into the 367 or whatever is according to your risk tolerance, okay? Okay. So let's look at this from a smaller perspective. Let's go over here. So anyways, that was really quick on the put credit spreads. I'm kind of getting off subject, but that's okay. I'm going to go deeper into detail about that during like, if you guys are interested in small webinar where we can all talk and just kind of go through it. I'll be more than happy to do that. MB, can you hear me? Are you on audio? I was just talking to myself, right? It's always funny. All right, so what I was talking about over here on Netflix again, I want to break this down, but I want to show you guys what's going on here. You're in between the edges, you're above the mid. So the mid is going to be your line in the sand for a scalp. So in this case, he's wanting to scalp. And so this is your stop, MB, just underneath this at 365.80 or so. That's kind of, 80 cents to 90 cents. So you could still take a beating on the options if it doesn't go your way. But if we bring this down into a 15 minute, let's go ahead and do that. And I'm going to put this on like you could just do 1 day, 5 days, it doesn't matter. You see here I have the intraday fibs on. Okay, notice we got a little bit of demand down here at 23.6. If we're scalping, we want price to stay above the 23.6 at all times. You can even say the 11.3. Looking for that move up into 367. Okay, looking over into the left, we always want to see kind of what's going on here. Okay, notice you had this top right here. I always look at wicks. Notice where it stopped. Notice this next wick, that's the LIS. Okay, these are your two targets to the upside on the scalp side. Okay. Yeah, Baba is looking pretty nice as well, man. It's really liking the LIS. It keeps getting there, pulling back and pushes up. The bigger picture, I'll share with you guys the TTM squeeze. I think Baba on the TTM squeeze that John Carter did looks really, really good. And I thought like, man, you know, I thought Baba, could have been potentially done. We're going to take this to a daily. This is my other charts that I have here. So when I go to 1 year, 1 day. So what I'm basically looking for on a squeeze is for these two red lines to come into the blues. Okay, you could see that basically if I were to zoom in here, this guy right here and this guy right here. For me, when I get this, Jay, are you listening by chance? I want to see because you had said that there was a lot of for you. Okay, when you were getting false signals, the only thing I look for is this, and this actually kind of falls in line with the way that I also look at things as far as average true range is these blue lines basically. Okay. And so what happens is the squeeze is when these red bands here come into the blue. Notice when they first come into the blue, what I look for is the move down. Okay. Then I look at my edges. There's the monthly. Okay. This was a signal to say, hey, nobody knows when it's going to happen, right? I mean, for me, it's when it hits the edge. So this is just another tool that I can look at off screen and say, okay, these guys are squeezing. I know a big move's coming. Oh, it came into the monthly edge. Wow. Okay. So notice that these things are still within here and notice we are still moving up. Okay. Just kind of cool. It is what it is. Just another tool. But see, you can't have too many tools and get paralyzed by technicals, okay? Doesn't make any sense. But they need to be confluent. They need to have somewhat of the same, right? Yeah, so if Netflix drops below the edge, and that's like your well, it's like right there, right? If this is where you look at this and say, that's too much of a stop for me. Let's just see how it's going to work there. Remember, in an uptrend, the bullish trend is 23.6 and 38.2. So far, on a scalp, this might not work for you. But far as a trader like me, selling put credit spreads, looking for the bigger picture, this entire area right here, far as the day goes, is your bullish channel right in here. And you happen to build some demand right here on the 15-minute. Okay. Yeah, a lot of people do get lost. But underdog, do you so honestly, do you see what I mean by confluence though? Like everything I'm doing is based off of, I mean, supply and demand. You know the edges are correlated with supply and demand. Um, like the skew and the P call and all that stuff. It's just giving me a broader like look and giving me a sense of validation when we're coming into, right? It's just validate. It's like, hey, I don't care about any of that. I really don't. I will never trade. Like, I know traders that are like, oh, the P calls at blah, blah, blah. I'm going short. And I'm like, what? Like, yeah, it is all noise. However, When I come into supply and it's a fresh supply zone, I will quickly scan all of those factors. P call, right? You can look at the advancers if you want. I don't really care about that. That's like on the daily. I'm just looking for intraday validation there. The P call, the bonds, the futures, right? All that stuff's going on. I want to see how the market's reacting. Okay. The skew. Notice the skew is up today about 1 point. So if we come down here to skew, it's at 129.13. 131 is where I typically start getting concerned. A lot of these things are showing a little bit of concern going into today and tomorrow. We can never time something perfectly, even though we have done it in the room several times. Don't be, you need to have a better understanding of the bigger picture. If it doesn't work right away, it's okay. The bigger picture is we need to be a little cautious here. Okay, that's why on any of these positions, you notice I'll say starting or I'm putting on put credit spreads and stuff like that. I have a defined risk. Does that make sense? Defined risk. I cannot lose over X amount. And when I put those spreads on, I'm okay with that. This is just income trades, and I'm able to manage them. Where else can you do that? If I put on a directional trade, I can't necessarily manage it unless I go out there and I buy puts against it and then I'm like hedging and stuff like that. And then it gets all weird, right? You're like, man, I got to put on this, but I have a call on this, and both of them I lost money on. I've seen it happen. Done it myself. So that's why I do like the credit spreads. And when do I want to put on credit spreads? Is when I want to define risk, when it's in a condition in the market where the market's not directional, right? And it's just kind of going sideways. But the end result is we could still just end the week basically looking back and going, holy crap, right? If we come over here to the ES and we just say, I mean, we're only on Tuesday. I get it. Okay. But this is Monday and Tuesday, And it's like when you back it up, which is right here, you can already see, wow, I don't know about you guys, but TOS is pissing me off. Sorry. Okay. Let me put this on 5 days. Sorry. Apologize. I got too much memory that I'm using in here is what's going on. All right. So right here, this is what's going on already, Monday through Tuesday. Okay. This right here. There is no direction here. Not yet. There could be direction straight to the downside. If we break and stay below this low today, so right here, we keep breaking down, then possibly. Okay. Oh, you talking about Netflix, MB? Oh, to buy credit spreads. So for me, your big money makers like Amazon and Google and those guys, I can do well by just doing a week out. But if we notice on the edges when you're coming into, let me see if I can find you the bigger picture. For example, let's go to SPY or let's go to the Qs. Let me see what I got on the chart first before I mess it up. Okay, I got this on there. Let's do a daily. This is where the edges really help me. Okay. So notice when we came into, I want to give you a scenario here, and I'm just going to pick any of these so you can better see. Okay, these are daily candles. Notice we have the monthly edges here. Okay, the aqua, the blue there. This is the mid, right? Right here. And then notice we have the yearly here. Notice that when we broke through, we came back, we found support, right? So this would be like me talking to you now going, hey, we have support at the monthly and the yearly. I find that these work very well. So if I'm using a yearly and a monthly, think about that for a moment, right, MB? I could sell, and I'm using a daily, I could sell put credit spreads out longer than a week if I wanted to. But really at the end of the day, I don't personally go out more than 3 weeks. That's just me. But you could. I mean, look how well this is working. Okay? Does that make sense? And you can sell, okay, on an iron condor, I could put credit spreads here, but I could have sold call credit spreads here. All I'm doing is using my monthly edges. Okay, so I sell under here and I sell over this. And it gives you all this time, 2 weeks, those would expired worthless on both sides, giving you an income trade. Do you see how that works? And I'm using monthly edges, so therefore I want to be in between those edges. Does that make sense? You can take ATR into factor for sure. I keep getting a lot of people, I think because I have ATR on here, I get private messages on Twitter like, are you just trading ATR? I'm like, no. The ATR is simply just a tool to show you guys. Like, I don't want traders buying way far out of the money. I think that's a bad habit that even I used to do. And so this just kind of gives you an idea. Like, you don't want to be buying something way out of the money when the stock doesn't even move that much on a probability basis. Okay. All right. So now, my biggest thing is I'm looking at the Qs, right? Looking at the Qs on a daily. Notice we are above, so this is real time now. Notice we are above the weekly and we are above the yearly edge. Okay. Notice that when price left here, we came down and retested and found support and moved up. Because I'm looking at the yearly and I would expect this to hold at least for a week or two, okay, and I could be wrong. Again, it's a defined risk though, is I could sell put credit spreads on the Qs underneath here. Now, before I were to do that, think about, now this is where you got to kind of put your gut in there. If I were to sell put credit spreads now, what is a catalyst that could help me? Can anybody tell me? Besides there being support there and say the trend stays up, what is something else in the background that has a bullish case to it right now? Can anybody tell me? When we're talking about the Qs, can anybody tell me a reason why selling put credit spreads here, besides the technical factors, might actually work? Yeah, I mean, China news, jobs, yeah, definitely those things can definitely help. But I was looking more for, we have earnings around the corner, guys. We have Amazon. We have all those things going. Do you think, okay, what is the probability that all these sell off hardcore into earnings? It happens every once in a while, but for the most part, don't we go sideways into earnings? Don't we sometimes move up into earnings? So we have like a handful of things going on right here. We got the edges. We have Bigger picture, we are trending up and we have earnings around the corner. Okay. Now, if I were to pick something here, let's say 182, I'm just going to 182.50. If I expect 182.50 to hold, okay, going over here and looking at the Qs, just going to give you guys some hypotheticals here. Okay. Let's say I want to go out 2 weeks, but I also don't want to buy put credit spreads on the Qs when Amazon and all those guys are reporting. Does that make sense? Because if you're wrong and those guys miss, then the Qs probably end up going straight down. You see what I'm saying? So make sure you go back and double check. So over here, I could look at Amazon really quick. And I know on Amazon, we're looking at 425, right? Let's look at Facebook and Google. There's probably a quicker way to do this. 424, Google. Don't have to worry about Google. It's the 29th. So basically, so far, the 24th through the 29th, I don't want to be in Q put credit spreads. Okay, so far. Let me look at, although the Apple falls under the Dow, we're looking at 430. Okay, am I missing any so far? Netflix, 16. Okay, so I probably don't want to go, man, these are the 16th? Wow, that's right around the corner. Um, so I could do 18 April if I wanted to, looking at 182s. They're going for 84 cents, and so I could find something around this. Okay, I could also just do this week. I don't think you get paid much. No. The better put credit spreads are kind of like what we did on Netflix yesterday. Okay, and oh, hey, here we are right at Netflix. Okay, the better way to approach any credit spread is whatever you're using as a indicator. Like me, I'm using the trendy edges. Remember, I put my put credit spreads on when everybody else was fearful, right? So I put them on here. And then price went straight up. Positive, right? And notice, Netflix, boom, right into the mid, right there. Now, call credit spreads, when you start feeling lots of euphoria and you're looking at my charts, let's go to Apple. And you're looking at my charts and you're getting close to these targets, take a couple things into consideration. What day are we in? Do we have catalysts coming up that could change this dramatically? You want to be careful, right? So again, it's a defined risk though, which is kind of cool. But you could be looking at T2 as it gets close here, you start selling a call credit spread outside of T2. Because think about it. The people selling the calls to these people, they are banking off a premium, right? And the euphoria, right? Or the Vega, it creates the premium. Everybody and their mom wants Apple, so I'm going to go ahead and sell you that call for more than it's actually worth. And so when we do that, we take advantage of the euphoria and we sell the call to you and we back it up on the backside. If you're not doing a naked, you back it up on the backside with one strike above that. Okay. All right. So we're able to sell that as price in Apple moves down. Maybe you're only looking for 30%. I'm telling you, it's really easy to squeeze out 30% in these like really quick. Okay. Does that make sense to you guys on that end? Being able to sell up here. Sometimes it's hard for people to do that because I feel like by nature, everybody wants the stock market to go up. So when you start selling people calls, it's like, feels weird, right? So maybe you're not comfortable with it. Think about it. It's kind of ironic how everything is opposite. It's like you feel better buying calls than you do buying puts. And so now it's switched around. Now you feel uncomfortable selling calls, right? But you feel comfortable selling puts. Okay. All right. So that's what happens there. Let's move down and just see while I'm recording this if there's anything I can go over um, during today to kind of see like what happened, what are things doing, and so forth. Um, and go over here to Costco. Costco looked good yesterday. It still looks good as a swing. It's still holding the LIS. Now this is the first down day. There is demand right here. So if it closes under, even if you lose, I want to say Ripster, you had jumped into Costco. So even if you lose, understand what's going on here is this is like your line in the sand, right? I mean, literally your line in the sand. If it doesn't hold here, look for the moves down into the mid, which is about where that wick came in. Okay. Look for support there. Tomorrow, if it starts picking back up, it starts looking like, some of the other names we were looking at, Twitter and so forth. Okay. Here, though, is demand. There is demand there. 242.55. Could want to get there before it moves back up. If you are wrong, if the blueprint is wrong, if you take the trade wrong according to the blueprint, it's okay. Just have some defined risk here. Know what you're getting into. Hey, I'm going to take this trade, but if it breaks this, I'm going to get out. Do not rely on hope. As I tell everybody, right? This is so important, guys. So important. If I were to trade my method, I have went over this a couple times, and it's in one of my lessons. If I trade my method and I take 10 trades and I am a consistent trader and my charts work 90% of the time, okay? And let's just say 70%. I have 10 trades. This one works. Let's say I get 50%. This one works. Say I get 100%. This one works. We're going off of 70% here. So I get another 100%. This one works. So I get 10%. Okay. This one does not work, but I have defined risk. I lose 30%, right? This one doesn't work. I lose 30%. This one doesn't work. I lose 50%. This one works. I make 200%. This one works. I make 50%. This one works. I make 100%. I'm not trying to say I'm going to make 10x all the time. It's not hard to do the math with defined risk and with a high probability trading strategy that you can end up making more money by looking at this. This is my PayPal, okay? This is my PayPal this week. Right here. Boom. Winner. Okay? This is if you took the scalp trade, I know that it gave you 100%. How do I know? Because my wife trades my trades. right? And she was off this morning. That's what she does. She's smart. She's like my #1 member. Okay. So, did you take Apple yesterday when I mentioned it with the strikes? I know it gave you 100%. Okay. This is SPY. This is Apple. Okay. This is Amazon credit, put credit spread right here. It's more than 10%. Okay. G Sound, just go over to go over to the live screen share and just click on that link. Even if it was yesterday's, just click on that one and it should get you there. Okay. So here, let's say this is my NVIDIA. Let's say NVIDIA just crash and burn. I lose 30%. Okay. Let's call it NVIDIA. All right. This one's Amazon. Okay. I'm just showing you the trades we've taken already. And these are pretty damn close. And even though NVIDIA is not down or anything like that, I don't think it is. Pretty close though. This one here, I don't think I have any other ones. I don't even think I've lost anything yet. But I'm just hypothetically speaking here. Let's say this ends up being, I don't know, Twitter. I don't like Twitter, guys. I really don't. Not my favorite stock, but let's say this is Twitter. And I started the position here, so I'm willing to lose 300 bucks or something, right? So that's Twitter. Say we have a nice trade come through on today, let's call this one. If you would have taken OKTA this morning, you probably would be up this much right now, by the way. It doesn't matter. So there's X, Y, Z, A, B, C, whatever. Okay? It's very simple math. If you define your risk and it does not fit why you got into the trade anymore, cut it loose. I don't care how you look at this, it works out. I'm not trying to pull, we're not looking through rose-colored glasses here. You guys can go over to the percentage gains that I make. These are pretty normal of what happens with my trades. Now, what if I have a really bad week? What if I lose 70%? Knock on wood, that hasn't happened, right? You suck at this one right here, Brad. It's easier to show you on the screen. Okay, I want to be 100% transparent. I have found a way to just honestly, I am so much more relaxed in life. I feel so much more calm about my trades. And you know what really started helping me? Going to the bigger candle, man. Just go to the bigger candle. Try not to stare at 15 minutes and 20-minute, 30-minute candles. It's just not worth it. Okay? I mean, think about it. I looked at PayPal today and it was down 60, 70 cents. But on the daily, I'm like, man, this thing's holding the LIS. There's nothing wrong with it. And it hasn't taken out anything that the reason why we entered PayPal was because of the break of the LIS. Remember? That's why we took it. Has it broken the rule yet? Has it fallen under the LIS? And it hasn't, right? So why are you going to get out of it? There's a couple reasons why you might get out of it. Because you got way too much money in it and you're just a panicked trader, right? And that's okay. We all start that way. If anybody in here says they never started that way, I wouldn't believe it, right? Um, even if we have a bad week, okay? Just want to show you guys this. If I'm giving you risk to reward on every trade, the LIS is your risk, the reward is your target. If you follow this, in most cases, you shouldn't be losing more than 30 to 40% on your options. You really shouldn't, unless you're not pulling the trigger and you're waiting to execute like most traders at the very end. then you get mad at yourself. Okay. You're like, man, if I would have taken the trade at the list right now, I would have made X amount of money, but instead I bought it right before his target and it went straight down just like he always says, right? So if you follow the rules, right, and then we turn this around and look at it a different way, okay, like this, and I'm just going to put 4 on here. Let's call it 10, okay? We take 10 trades and you've lost 30, you lost 30, you lost 40, right? Maybe, you're scared now. You lost 3 in a row and you lost 20, right? But over here, you made 100, not $100, 100%, and you made 50%. And you keep your discipline where it's supposed to be, $500 per trade on every one of these. What does that mean? If you get to something where the the option price is too much, don't buy it. Have a set of rules, guys. $500. And these are hypotheticals, $500. If this were the way you traded, the list broke, right? This is the reason why this was no good anymore. Okay. You took it above T1 and T1 broke. No good anymore. You took a list trade, right? These are just using my methodology. That broke. This broke. If you do the math here, okay, it's 120%, right? But over here, you made 150%. Did you lose money? No. You have to have a defined process. But let me tell you what actually happens with most traders when they first start this journey. When you lose this trade, your confidence is broken, but you're like, hey, I can do better. You lose this trade, you start going, dude, I got bad luck, man. You lose this trade, you're like, I suck. I really suck at this. Then you lose 4 trades in a row, you're like in the bathroom crying. It doesn't matter what I do. It doesn't matter who shows me what. I am the worst trader in the world. Guess what happens during this trade right here? If anybody can guess this, I will be happy. What happens on trade number 5? No. Let's say you took it. But yes, that's definitely an option too, Pete. That's a great answer. But let's say you took it. What happened on trade number 5? That would be one thing. But I guarantee you, 9 out of 10 of you guys did not put $500 in there because you already lost 4 before that and it never works for you, right? It never, ever works for you. So you put $250 in this trade and you made 250 bucks on 100%, right? And you said to yourself, if I would have put 500, I would be even now, right? But instead, you put 250 bucks here because your confidence has been blown out the water because you've lost 4 trades. And then when you go to take this trade, I'm telling you, now you're still not confident, guys. You've only won 1 out of 5, right? And most traders bump it up to 3. Now you're going 300 bucks instead of 500 and you made 50%. You made $150. And then the math doesn't make sense and you never made your money back or you got out flat. Okay? just flat. Bummer. You have to be disciplined. You have to take the same amount of trades. The probabilities are what actually are in your favor. Do you understand that? You have to understand that or you're not going to get ahead. If you use emotions, you will lose. The best way I can tell you is you need to look at yourself in the mirror and say to yourself, I cannot be rich trading. Just say it. You're not going to be rich, guys. But what you will be is something consistent that will turn into riches if you can get over your emotions. If you can consistently, if you can consistently do this, you will look at your P&L. And this, I've been telling people this forever. I don't look at P&Ls until the end of the week. I seriously don't. It's not because I'm rich. It's not because I have a lot of money in my accounts. It's because I understand my process and I believe in it. That's it. Then when you look at the end of the week and you're using this methods where you cut losers and you let winners do what they're supposed to do, you're going to make more money. You're going to consistently feel better about what you're doing and you're going to freak out a little bit. You're going to be like, holy crap, this is easy, right? I mean, seriously, you're going to look at it and go, this is easy. It's going to feel weird. I remember when I first really started embarking on being successful in trading, I literally felt like I was stealing from traders. I'm not kidding you. I didn't feel right. Okay, being transparent here, I tried to steal something when I was a kid. My dad was in the military. I have to share this story with you guys. This was so stupid. I was probably like 10 years old. My mom sent me $200, literally $201 bills. She sent them to me. And I said, man, that looks so awesome. I think I'm rich. Like I had a pile of money. But there was one thing I was missing. It was a paper clip, a money clip. Back then, money clips were super cool. And I wanted a money clip to go around my money. It's so weird. My dad took me into a shop. I stole a money clip. They caught me on TV. And it was the most embarrassing thing in my life. Absolutely embarrassing. And I remember how I felt, not only embarrassed for my dad, but I just could not believe how horrible it felt. Now, where am I going with this? I literally felt that way when I started becoming a profitable trader and realizing that I'm stealing money from people. That's what it feels like. But if you think about it, we are taking money from traders. We are stepping up our game in order to take from them, right? You got to be better than your opponent. So that's all we're trying to do here. So at first, even when you start becoming successful, you start doubting that, why am I successful? Why is this happening to me? Right? I think the best way, in my opinion, is to be robotic about what we're doing here. As easy as that sounds, it will come easier if you use smaller amounts of money until you get comfortable. Okay? So just get comfortable. We're not in a rush. Okay? Yeah, so we're just off there on that target there of, or did it get hit? Did it get hit on PayPal? Well, the brokers do win, AJ, if you're not using a system, right? And think about it. If we use the typical number, 95% of traders don't do well. Yeah, your broker is making a ton of money. If you're over trading, they're making a ton of money. Am I right? Right? I know this. You guys remember, one of our friends who's in here, he just stays really quiet. He shared with you about a year ago his commission cost. I mean, I was blown away. $140,000, man. $140,000 in brokerage costs. And we were only like a couple months into the year. That's some serious like trading right there. Holy smokes. Could you imagine? Like, dude, right? Most people are like, I'm trying to make 140,000, right? And you're paying that much in commission cost. Holy smokes. I can't make this up. Oh, you have a RS7? Uh-oh. Sack, did you hear that? Oh, it's on your list. Oh, so you want to buy it. Got you. All right, so ES still holding its ground. I think I'm done preaching about all that stuff. Look, again, I'm very transparent. Everybody knows that in here. I have not had, this has been a growing room, and maybe I'm having this conversation today because we're coming up on almost, that anniversary time frame, and we have grown so much in the room, and it's not always been easy. We've been, I feel like, through some of the hardest times in the market. Um, we have been through, this is definitely a family, and I appreciate everybody. Even, if you're new here, you're already family. It's about like this room. So I was talking to some advisors, and they said, John, you should be interviewing people that come into your room. Like, that's how good you guys are. It shouldn't just be a free for all, right? We want to get the right kind of family members in here. We want to, be able to educate and be on the same page and show a system that works. But I think that looking back, it's very easy for me to say that I have shown my emotion, not by audio. Like I haven't lost my mind or anything. I've heard some crazy stories out there about moderators losing their stuff on in a room and losing money like crazy. But what I'm saying is I've kept on positions way too long. There was a time when I wasn't letting trades. No, sorry, I was letting trades go to zero. Um, there were times that I didn't really get that we were in a cycle, and I was way too net long, meaning I just had way too many positions that were long. There was a time when I was putting on hedges, really stupid. I'm telling you right now, I've lost more money in the past going, oh, I put on a bunch of SPY hedges. That'll make sense. And not really being in tune with the market. Okay. Right. So when you're not in tune with the market, you don't understand the cycles, you don't understand what's happening, you tend to be frantic and you do all kinds of weird stuff, adding to losers, um, buying hedges, and then you look back over the year. And I've said this in the room before, last year, my biggest loss, like when you're looking over the whole entire year, my biggest losses were adding SPY hedges. And so in my mind, it was okay to let a hedge go to zero, right? I kept saying that to myself. Well, I'm net long, and those other positions would be going up. But over an entire year of hedging your account over and over, it can get very expensive. So you just got to be careful. Like, don't be in that mindset. Okay. Um, yeah. So, the biggest thing is just to focus on your system, cut your losers. I think that everybody, and tell me if I'm wrong, I feel like everybody has a hard time cutting losers. Maybe you can add add to this, Brad, because you said that you have a hard time doing this. Um, what makes you hold on to a loser? Is it because you had one position, and I talk about this, you had one position during your trading career where you let go of it and it went up 5, 7, 10x. I tell people you need to look at it like this. The probability of all the bad trades you have taken, that might have happened to you just a couple times. The probability is like less than 2%. So why are you going to hold on and take an 80% loss or a 100% loss for something that has a 2% chance of happening? Does that make sense? Think about that. I mean, say that to yourself, right? I mean, hope is cool, but I need you to say to yourself, I have a 2% probability that that let go of this and it's going to go straight up. 2%, guys. Oh yeah, definitely does that too. But imagine, I mean, honestly, you're gonna give me $1,000. Okay, just send me $1,000, guys, on PayPal. I'm gonna tell you right now, 2% chance I'm probably gonna give you that money back. Would you send it to me if you're wanting it back? If I'm like, hey Brett, anybody, Brad, I need to borrow some money, $1,000, 2% chance I'll give it back to you. You gonna give that money to me? Hell no. I don't know any friend that would take those odds. Yeah, it's not gonna work, guys. All right. So the possibility of you making that money, you need to just throw it away. If you lose 20%, 30% on a trade today, and we wake up tomorrow and it does get above the list and it does make a higher high, take the trade. Be okay with your choice, is all I'm trying to say. You have to be able to execute and go through the motions to become that robotic trader that everybody talks about. See, everybody talks a big game, but they don't really like practice what they preach. And so you don't know what it feels like to put yourself into a position where you become a robotic trader. You just know how to talk about it. You don't know how to actually take the losses. Look, for me, it's hard. I've been in this room and taken a loss for 10%, and the next day it go up 300%. I've been there. I let go of Twitter last year. Sorry, I let go of Tesla last year. This is a true story, folks. I let go of Tesla for $150 loss on a 200 and something dollar option, and it went to $3,000 the next morning. You guys remember that? That's when he smoked a big J. You guys remember this? Good, good, right? So this story, yeah, I remember that, Jay, and so did a couple other of you guys. Okay, this story even gets even crappier. So then, so let me think about this. Okay, that was a put. I bought a put position. It went up 3,000%. That's what it was. Because I remember the guy that came in, he made 3,000%. And it went up 3,000%, and I took a $150 loss, guys. Are you kidding me? Then guess what I did the next day? I bought a call. I took a loss on it for $100. Guess where that went up the next day? 2,500%. I can't make this up. Okay? I lost 5,000% by absolutely doing what I believe in. So believe me, you think you've been stung? Like for me, I was like wanting to throw up. Like I just couldn't believe it. Because as a moderator, I want to be able to be like, hey, check this out, guys. You know, I didn't follow my rule and it went up 30x. So that will, and I can understand how some of you might have a problem getting rid of losers. But the probability of that happening is still like 2%. Man, that 2% hurt me emotionally. It did. I'm not gonna lie. Like I was pretty pissed off because I was like during a time that trying to make money in the market was absolutely hard anyways, right? And then the one chance that the market gave me an opportunity to be an amazing trader 2 days in a row just, slapped me in the face and it's like, you stupid John. Even my wife said it. Why do you care about $100 per contract? Like, why do you care about $100? Cause baby, I gotta follow my rules. I'm trying to lead by example here, you know? So that's my thing, you know. Other and that's the thing about rooms too. Again, to be very transparent, is I try to only present what is made off an option when I post it. I don't want to create FOMO to anybody that doesn't know me. I don't care to, and believe me, I have private messages here in the room. John, you should be like showing everybody how much money's made, and like, you'll get more members. And I think that I don't want to create FOMO. I think that you can do the math. If I made 50% on PayPal and I put $1,000 in there, you know, maybe I made, if I trimmed, maybe I made $350. If you bought 100 contracts, right? You paid 10 grand, you made $5,000. I don't care. I personally only care about the percentage. That's me. Okay. So you're not going to see me bragging about the money. Okay. Now, of course, you get some kind of Tesla trade where you're trading something at 1 and it goes up to 30. It's kind of cool. I'm not going to lie. It's kind of cool, right? It's pretty neat. But anyways, that's what's going on there. All right, so I'm going to go ahead and take and stop this